Hello, everyone, and welcome to Raising the Brand, where we sit down with brand builders and capital raisers in the private markets to delve into their stories, strategies, and experiences. Today, we're sitting down with Supriya Agarwal, Director of Marketing at SOSV. Supriya's path took her through Fortune 500 marketing at JP Morgan, Moody's, and Gartner before she moved into venture, where she's since built 2 proprietary intelligence platforms from the ground up. Hi, Supriya.
Hi, Job. Thank you for having me.
Thank you for joining us today. You've gone from Gartner, right, to JP Morgan, to Moody's, and then to venture. And what do you think is kind of the thread that's connecting all of it? And at what point did marketing and venture start to feel like the right fit?
Yeah, so I think the thread connecting all of it has been that my work has always been at the intersection of marketing, data, and technology. I did not start my career in marketing. I started as a business intelligence associate at a corporate executive board, which is now Gartner. And my first job right out of college was to create dashboards for senior sales leaders to keep track of the revenue portfolio, where I consolidated data from multiple sources and automated using a bunch of tools. And this role really set the strong analytical foundation I have today. It taught me that good decisions come from good data. And then the 2008 financial crisis happened. I transitioned to an email marketing role, which was very new at that time. The team was new, the role was new. And as part of this role, my team was a global news desk where every morning we used to identify the latest business news and pair it with CEB's research and product insights, and send it to over 100,000 C-suite executives across the globe. And this role taught me that marketing is not a one blast message. It's about the sending the right message to the right audience at the right time. So both these roles establish a very strong foundation, and I built on this later. I came to New York for my MBA from Baruch College. I interned at SAP, where I helped manage the content on the website for SAP's 14 lines of business. And then at both JP Morgan and Moody's, I learned how to build marketing operations that scale, and how to build systems that people could trust. Moving to venture was not deliberate. I didn't like wake up one morning thinking that, hey, let's work for venture capital now. It happened organically, but then eventually when I joined, I found that it was a great natural fit. Curiosity was encouraged, experimentation was expected, and you were trusted to solve problems in unconventional ways. What also keeps my intellectual curiosity alive is that every day is different. It's very diverse. No one day looks the same. So one day I'm thinking about data and automation. Next day I'm thinking about how to recruit investors for an event. Third day I'm looking at some other marketing challenge. So it really keeps me energized, and it brings out the best in me.
It kind of sounds like my own journey going from corporate to more of a startup environment where, as you said, every day looks different. When you compare Fortune 500 marketing and VC marketing, they do run on very different clocks, very different budgets. What was the hardest adjustment going from that world into SOSV, into the world of venture?
Yeah, and I'm sure you'll agree with this. It's resources, by far the biggest adjustment. That at Fortune 500, you have a team of specialized experts who can take over procurement, design, operation, engineering support, pull things off your hands, and but the trade-off is that things move slowly through the process. For venture, it's very much like an early stage startup where if you see a problem, you don't think that, okay, whose responsibility is this? You think that, okay, how can I resolve this? How can I solve this problem using the resources I have? So adjustment is resources, and the second adjustment, which I would say, is the pace of execution. It also ties back to how decisions are made in Fortune 500 versus venture. In Fortune 500, you have to be very thorough in everything, because the smallest mistake can be very expensive. So, for example, email marketing campaigns, they can take weeks because they go through multiple rounds of review, legal and compliance. At JP Morgan, I remember we used to have service level agreements, and 2 weeks were just reserved for testing. Um, because you had to test iteratively and multiple times to see if the right contact person was reflecting in the personalized email, or for typos and errors or any wrong information. In venture also, you have to be thoughtful. It's just that you're expected to iterate and move forward with even imperfect information. That is probably one of the biggest mindset shifts I had to accommodate, moving from certainty to optimizing for learning. I would say, yeah, those were the two biggest adjustments for me.
Yeah, that resonates. Used to have a team of 10 with a head of research. We had content marketers, and then now I'm everything all at once. Also, my very first mistake in marketing was I used a test merge tag in the subject line and forgot to swap it out. This was 10 years ago. It went to 3,000 people.
Yeah.
And now, just kind of changing gear, you've built Atlas, right? Which is a proprietary network of over 7,000 investors
Yes,
that
correct.
unifies first party data, second party data, third party data, and
Yeah.
you're using it to identify and prioritize and engage with them. Can you walk us through a little bit what that does day to day for your team at SOSV?
Yeah, sure. So, but before I walk you through Atlas, I also want to tell you the problem which
Yeah.
I was trying to solve, which you will identify with and agree with, that every interaction with investors generates data, and that is captured across multiple sources. So it can be in your emails, it can be in your CRM, it can be in your event platform, it can be in people's memory. And over a time, as an organization grows, it's hard to remember each interaction and identify which investors to surface when and why. So the data is very fragmented across multiple sources. I built Atlas around two primary use cases. The first was marketing, where typically for event marketing, there's a spray and pray approach where you just blast off to a list and then hope it works. Atlas allows us to take a more targeted approach, where I can build a segmented lists based on a variety of filters, by geography, by investment preferences, by their relationship history with SOSV, by their engagement patterns and their co-investment patterns. So, for example, if we have to do an event in Toronto, which is focused exclusively on climate investors or hard tech investors, I can generate that list in less than 5 minutes. So that is the first use case. The second use case is relationship intelligence for investment teams. As you know, people in venture are very relationship oriented, and realistically, it's not possible to remember every interaction, uh, introduction, or introduction event or any conversation over a period of time. So um, so having Atlas helps us surface which investors to connect with, which investors to introduce to a particular startup, prioritize outreach, or making informed decisions before reaching out to somebody. Atlas to me is more like a decision support tool, where the goal is to help people spend less time finding information and more time building meaningful relationships or making decisions.
So during the setup of Atlas, right, internally, what was the hardest part of getting it from idea to something that the deal team could rely on, that the company could rely on?
That would be adoption. Building the data model was the easy part. But as you know, venture people are very relationship oriented and they already have a lot on their plate. And you go to them and tell them, hey, there's one more tool to help you do your job better. It's not easy. So, and the way I navigated is to show results from data early and often. So do a before and after comparison and show that, okay, this is how this list performed versus that list, or this targeted invite generated a better response rate than the mass email. And the more you do it, and the more you demonstrate that, okay, the data is effective, it works, I think the skepticism gradually goes away.
Yeah, data, data, data.
Yeah.
That makes sense. Okay. And if you think about a lot of GPs I speak to, like there are still GPs running their outreach program off of spreadsheets, off of instinct. What convinced you, or I suppose what convinced the company to take it away from spreadsheets, take it away from that type of setup to a real infrastructure investment?
Yeah, so this is the interesting thing. I was actually hired to implement and evaluate a new CRM. But then when I evaluated the workflows, I realized that we already use so many data platforms, and um, is that really required? Maybe the challenge is not to find a new CRM, but the challenge is to somehow unify all this data in one place. Because the data was in silos, nobody could really act on it efficiently. So I ran proof of concepts with multiple vendors, and I tried to find a solution, an affordable solution where we could unify all the data in one place. And there was nothing which was very convincing. Vendors also got frustrated with me. But I wanted to ensure that, I insisted on validating a real product workflow rather than just a sales demo. And then eventually I built a small pilot which unified the data, and something which people could use for decision making. And once this pilot proved that it could work, I the buy-in came naturally, and I had the support and the executive sponsorship to continue building it. And then I continued building it incrementally, and that is what had led to what Atlas is today.
And where does it go next? Are there any grand plans to build upon it?
Yeah, I'm excited about a few directions which we would be taking. First is self-serve. So, allowing the teams to retrieve insights using natural language queries instead of relying on me or manual reports. Second would be because it's an evolving data ecosystem to continuously expand and enrich the quality of the data. And then over time, I would like to, transition Atlas from an operational tool to a strategic tool where it could surface insights on its own. Right now, it tells us who to connect with and why and when. But then over time, I wanted to tell us, okay, where we are under indexed, or where there are opportunities to expand our network and engagement, or where do our strongest relationships lie. So those kind of insights.
Something that I still kind of want to touch on is when we started our conversation, we talked about your journey, right, from Fortune 500 into VC. That definition of marketing at a venture firm, is it closer to brand, closer to demand generation, as they call it in the tech world, or is it some blend that doesn't really have a label just yet?
Yeah, it can mean multiple different things because a venture firm is trying to build its reputation and then also take action. One day you're telling your firm story to founders and LPs, the other day you're trying to recruit investors for an event. So I think the honest answer, it's a blend. It's a mix of everything. It just depends on what the firm is trying to accomplish.
Yeah. And do you think there's a misconception outside of venture about what a marketing function at a VC is for or not?
Yeah, and this is something which I had too before I joined venture. People think or assume that venture capital does not need marketing because the product is money. There's an assumption that if you have money, founders will come to you on their own. And the reality is that the venture business is a very competitive business. You're not only investing or raising capital. You're not raising capital only from LPs. You're also trying to become a partner which the founders can trust when they have multiple offers. So a venture firm is, trying to raise capital from LPs, build relationships with founders, build relationships with co-investors, and also relationships within the innovation ecosystem.
It's interesting hearing you talk about Atlas and building the use case and talk about adoption. Suppose when you are also building a marketing function inside a VC or GP, it could still be quite a blank sheet, right? You start off from a blank sheet of paper. Hasn't really been a playbook to follow. Where would you tell them to start the marketing journey at a VC firm if, let's say, they don't have a marketer just yet?
Yeah, I think I would start by asking this question, what is it that makes your firm different? Because there are 1,000 other venture firms, and if you're not able to articulate why you are different, it would be very hard to kickstart the marketing. I think it's very important to differentiate, and then identify what makes you different. And once you've identified what makes you different, it can be your operating model, it can be your team, it can be your network, it can be anything. But once you've identified that, reinforce that through every marketing activity. So whether it's your events, it's your social media, your website, your founder communications, investor outreach, but every channel is reiterating the same story from different angles. And this consistency builds credibility. And then credibility is what builds a firm's reputation. I also think there's another important thing, which I should say, that marketing cannot invent differentiations. So many people assume that, oh, we'll raise a fund and then marketing, we'll hire somebody for marketing and that will take care of everything. And that is not true. If you're not able to articulate and have a distinct point of view, no great marketing is going to fix that. But if you generally do have something different, marketing can help people remember it, understand it, and trust it over time.
Yeah. Yeah. What's the saying? You could only market a bad product once. If you had one piece of advice that you wish you had heard earlier in your career, like what would that have been?
Yeah, I wish I trusted. I told myself that I'll figure it out. Early in my career, I wanted to be in too much control and wanted to know all the right answers and know where I was headed with certainty. But then over time, I realized, looking back, career is not a linear journey. And sometimes when you do good work, you're curious and you are always learning. I think opportunities have a way to find you, even the ones you never imagined that they would come your way.
Yeah, I love that. I think it's also a big reason of why I personally set up the community is to have that peer network as well that you can talk to about things like this. And you don't have to do it all alone, I suppose, this journey of, marketing itself is relatively a new function in the industry. So it's good to have people to talk to and
Yeah.
share your experiences. And so it's something that we always ask at the end of every Raising the Brand interview is, what's your favorite brand outside of the private markets and why?
I have many favorites across different categories, and I grew up in India, so my lifestyle is a blend of East and Western brands. But if I had to pick one, it would be Apple,
Oh,
and
yeah.
it's because of the user experience. So with any Apple product, when I pick it up, I don't have to think about how the technology works. It's frictionless, and I can just do my whatever I'm trying to do. This has also taught me how to build products. So, when you're switching on different contexts or multitasking throughout the day, product needs to be something which doesn't demand your attention. It's intuitive, and it just lets you, it removes technology out of the way and just lets you whatever you're trying to do. And that is why I admire Apple.
Well, thank you so much, Supriya, for joining us. And if people want to reach out to you, how can they reach you? LinkedIn? What's the
Yeah, LinkedIn
favorite?
would be best.
Yeah,
I'm very
okay,
active on LinkedIn.
good stuff. Well, thanks so much. I look forward to
Thank
seeing you soon.
you.